Hello and welcome to Virtual Investor Conferences. My name is Eric May, and on behalf of OTC Markets, we're very pleased you have joined us for our next live presentation from Alkaline Fuel Cell Power Corp. Before we introduce our speaker, a few points to note. Please submit your questions in the question box to the left of the slides. If you are interested in scheduling a meeting with Alkaline Fuel Cell Power, please click on the Meetings tab found on the left navigation bar. You'll be able to view the company's availability and submit a meeting request. On a final note, all of today's presentations will be recorded and available for 24/7 replay. At this point, I am very pleased to welcome Frank Carnevale, Chief Executive Officer of Alkaline Fuel Cell Power, which trades on the OTCQB venture market under the symbol ALKFF and on the NEO under the symbol PWWR. Welcome, Frank.
Everyone, thank you very much for joining me today. I'll try to be quick enough to leave time for questions, but I do appreciate it. I want to thank the OTC and Virtual Investor Conference organization for putting this on. It's critical for us to convey our story and our narrative to investors, and this is a great way to do it. We appreciate that. Quite simply, what I'm going to walk you through is we are delivering power to the people. It's as simple as that. And I'll walk you through how we're balancing our diversified portfolio to really better mitigate risks for our investors. And I'll walk you through a bit of that. So I'm going to take you through to a few slides here. Disclaimer, forward-looking. Let's talk about who we are. We have three key steps in our current business plan in the shift towards a net zero carbon economy. We know we have the solutions to get us to net zero, but how we do get there and the right path to revenue and minimize burn is critical, right? So I can keep focusing on a solution that won't generate revenue for years. That's not what investors want to see. I'm going to walk you through a bit about how we've done that. The current model we have today is that we have invested and we are investing in a traditional power and heat business where we own long-term energy assets. We already have one that's operational. We just had our first, Q3 was our first full quarter of revenue from that. And that increasing of that revenue base is meant to offset the fact that we have fuel cell business, but there's still a few more years until we get that desired hockey stick that you want in a clean technology. But in this current business model, while we have this operating asset, we have a sales pipeline of leads and some that are signed, $50 million of additional capital to deploy over the next few years. And that's a really big part of how we continue to de-risk our business model for everyone. And I can get more into that. The second part is this near term. How do we get our fuel cells to market quicker? So we did originally go down a path of developing this 4 kilowatt fuel cell, this combined heat power fuel cell. And that's really our longer term strategy, because our fuel cell, as much as it's ready actually come January, and I'll get into that, we need to make sure hydrogen is available to those end customers in order to run a fuel cell. So this past summer, we decided, how do we augment that future potential? How do we make sure that we use our fuel cells for markets that are more immediate? Again, trying to get to that revenue quicker. And so our near-term strategy is we are developing fundamentally a 10 kilowatt generator fuel cell that in 2024, that 10 kilowatt will be ready. A 4 kilowatt will be ready in 23. In 24, the 10 kilowatt unit will be ready. And that is intended to be stackable for other integrators to integrate into generator packages. So that's more near term, looking at revenues in the coming years from that. Then the long term one is the one that's actually the most ready, is our 4 kilowatt, our home unit. We actually just announced that we're launching the prototype of that on January 11th, 2023 in Belgium, and we'll talk about that some more as well. So I'm really excited about these things. We don't spend a lot of time on the problem. I think we all understand, really, it's a global problem of climate change and getting to a net carbon zero economy. But what I want to talk to you about, and we have some points on what the problem is. So we know everyone's in a rush to reduce emissions, but I'm really focused on who are we, or who or what are we going to be taking our business away from in order to be successful in this energy transition. That's kind of the bigger question, is if I was trying to sell a widget that no one's currently buying and no one currently uses in their day-to-day lives, it's not going to be an easy sell. We're really looking to take load away from other people delivering it today, and that's a big part of our strategy. So again, our power generators and utilities, We already know that the current utility industry in North America are talking about spending 2 to 3 times their existing installed capital base in additional capital over the coming years just to decarbonize the grid. We see that as a huge opportunity to take advantage of the fact that all that increased capital will result in way higher increased rates to customers. And that's where we get to go after them to be very competitive for that. The cost of renewable power, we always hear about it, solar, wind, everything keeps coming down in price, coupled with the gigaton of electrolyzers, right? These are the machines that convert the renewable power to hydrogen. They're being built around the world on record pace to everyone's into that. Shell, even utilities are all trying to race to build out these electrolyzers in order to meet the demand that's coming for hydrogen, green hydrogen specifically. So we see those costs continuing to come down. And I'll just say this as, again, identifying the problem. We keep thinking that part of the solution is to use a 120-year-old electric grid that was designed to have power systems, power plants, somewhere else, not locally in a community. And we're now at the other end of that spectrum where you can literally put a power plant in your home. And it really begs the question of why do we continue to invest in this very complicated grid system to the extent that we are compared to what we can do behind the meter. So again, those are parts of interesting challenges as part of the problem. Again, don't have to get too much into the impending changes. We know that hydrogen is going to be a key component going forward. And again, what I want to focus to you, the investors, on, it's interesting. In North America, I've recently been on the board of the Canadian Hydrogen and Fuel Cell Association. Even in Europe, when you hear about people talking about hydrogen and all the development of it and the deployment of it, you rarely hear at all about it reaching the end consumer. And I think that is one challenge in the marketplace of hydrogen, is that the people who are driving hydrogen to date have been more geared towards mobile applications and vehicles, fleet, planes, trucks, and maybe even large in-grid applications in the megawatts of sizes. No one's thinking about what I'm going to call the voter. No one's thinking about getting hydrogen to the end customer, the end consumer, who ultimately needs that cheaper cost of electricity. So I think that's something we'll continue to focus on as a business, but that is another change that we're seeing, another opportunity. Again, let me just walk you through our solutions. It looks like there's 3 lines here, now explain it. So Power Flow Streams is the name of our CHP business. We do have one operating asset. That is a combustion engine on the left with the green unit. Over time, we can use cleaner fuels for that, and we can eventually shift more use of fuel cells. But we have long-term energy contracts. That is a developer, owner, operator business. We're developing an alternate asset class for investors to feel comfortable about those types of returns. That is that business with the $50 million pipeline. On the fuel cell power, that is out of our Belgium company. As I said, our prototype of our home 4 kilowatt unit, CHP unit, is literally launching on January 11th. Can't wait for that in Belgium. So that's a key one. We've already announced 2 pilots for our units, and we'll get more into that. And then the one beside it is the 10 kilowatt, the conceptual design of the 10 kilowatt generator, which again, we think will be far more immediate revenue in the coming years than what we expect from the home unit. And that's what we're talking about in what our lines of business are today. High level again, Power Flow Streams. We acquired this a few months ago. We have over $51 million worth of deployable, projects of that type of capital size that we can deploy. We are moving them forward. I'm timing a lot of our speed and how we move them forward, matching the capital requirements and our equity requirements along the way. We already have one operating. We have another one we've signed, and we've announced a $2.2 million capital project in the Toronto area. Again, that one will spit out about $16 million over the 25-year lifespan of that contract. And I will just say, what's interesting about that being today's answer is that even today, as we compete with the local grid and we put those opportunities in front of a condo corporation to buy our power versus a local electric utility. Let me just say this, which is always intriguing. If a local utility were to charge $1 for their power to that condo corporation for whatever power they're selling them, we know that utility is making about 9% on their equity. So 9% cash on cash. We know that we can sell them power at, say, 80 cents versus that dollar. So the consumers win by that. And we know that we can generate about 11% unlevered return, right? And we have an ability to obviously lever it up much more than a local utility. So we're already economic in taking these type of power systems off the grid from the local electric utilities and deliver cheaper power to the consumer. That's power to the people, and we're very excited to continue that model. I'm gonna go back one. Immediate benefits, as I indicated, we are selling this power to our end customers. We talk to hospitals. We have a lot of interesting organizations in our pipeline, including a lot of condo corporations. We are selling them power at a discount, and we get into some really interesting methods of how we do that. In some cases, we take the gas risk, which not too many, in fact, no other CHP companies I've come across are doing that. We can take the gas risk. We understand it. And in some cases we don't, we can give much deeper discounts up to 30%, 40%. So we're excited that we have a sweet spot to go after more immediate revenue and deploy that 50 million. On the near-term potential, so let me go into our 10 kilowatt generators. In 2023, we'll complete our 4 kilowatt generator unit. We'll get certification on the back of that in Europe, the CE mark. We already have 2 pilots we've identified in most likely the North American markets to deploy those units, those prototypes. And I'll get into that a little bit, but one is, I'll say this, the way that we sell more units and we get to revenue quicker and earnings quicker on our fuel cells is we find ways of getting hydrogen to the end customer quicker than maybe the path it's currently on. So that is swimming a bit upstream. We have everyone looking at big industrial plays, but how do we get hydrogen to the customers we need them to get to? So we have 2 pilots that we've announced. One is natural gas companies in North America can easily inject about 20% hydrogen into their natural gas systems today and deliver that to their end customers. When they do that, and we are looking to run a pilot of this, we've signed one with Progressive Clean Technologies. When they send 20% hydrogen in your natural gas pipeline all over to your home, let's say, we can stick in a hydrogen separator technology through this partnership that literally just extracts the hydrogen out of that pipeline, allows us to use it in our fuel cell, and lets the rest of the natural gas flow through to the remaining customers. This is a great way of delivering hydrogen to customers quicker in North America, and we're trying to lead that charge, and we've announced that pilot. More details to come. Another pilot we recently announced is on the use of green ammonia. So green ammonia, when you create your hydrogen, if you convert it over to ammonia, in this case green ammonia, we already know there's a global market to transport it. It's easier to ship. It's more dense as a total fuel, as a logistics package, than if I had to put the same amount of hydrogen on a property. So we're looking to run a pilot with this company that has an ammonia cracking technology. And that ammonia cracking technology allows us to get the hydrogen right at the time of use, convert it to hydrogen, or back to hydrogen, and then we use it in our fuel cell to generate the power. And so we're looking in discussions for a few final sites for that technology. Why that's relevant, and this is the near-term potential, which I find fascinating. Let's just take sake of argument of 1 cubic meter, which is not big at all. 1 cubic meter can hold, on average, about 20 days worth of 24/7 power for a house. That's it. So that's not very large, and that's because green ammonia has a pretty good punch to be able to store that. And why we like ammonia, again, is a way to get campuses, universities, hospitals, big industrial zones to store that ammonia and to use it in this cracking technology, is that as the cracking technology converts it back to hydrogen, our alkaline fuel cell technology is able to take a far greater amount of ammonia left in that conversion than, say, a PEM fuel cell, an alternative fuel cell. So what that means is, it's less cost, less capital, less operating to convert it back to the hydrogen for a fuel cell. We see a great market. So again, really excited the near-term potential to deploy these types of fuel cells. On this one, look, we're ready for the markets. As you can tell, we have a pretty good sense of what we need to do to drive greater adoption of these fuel cells. We see markets in Europe where you cannot use fossil fuel energy in order to generate your power on a construction site. So we're certainly gearing up for these types of interesting markets. At the time, so I think we're doing okay. Our ultimate solution. So why do we think our alkaline fuel cell, what's so unique about it? We do have some unique advantages, and they offer just really a tremendous value proposition to underserved smaller customers. And so what I'll get into quickly is that everyone knows about PEM fuel cells. They're already commercial in a lot of mobile applications, cars, trucks. They are very dense. And so that dense, it's great. If we needed a dense solution, I'd probably use a PEM fuel cell, but we don't. And so the PEM fuel cell could be around, say, $1,000 a kilowatt in order to generate that. In our case, we're not as dense at all with an alkaline fuel cell. Just the way that we're designing it, the way that we use our fluid, our KOH fluid, our alkaline solution within our fuel cell, we have a much larger package. However, a larger package is this. So in a home, if I wanted to have a unit for backup and peaking, this 4 kilowatt maybe reaches a 7 kilowatt peaking output. So again, for a home, we're talking about the size of a washing machine. A washing machine can absolutely fit within a furnace, a boiler, a mechanical room of a house. There was no need to make it a bed box. A washing machine can work. And because of that, we get into some of the other advantages of effectively we are about half the cost of a PEM fuel cell. So that's the other advantage for the end consumer. It's about cost, and we're trying to make sure we make it very affordable for end consumers to want to have our fuel cell to compete with the alternative. As I mentioned, our prototype launch date is on January 11th, big event in Belgium, just outside of Antwerp. And so we can't wait to launch it, and I'm actually really excited. We have a great name associated with it. So for high level, if you don't understand how a fuel cell works, you input hydrogen, you input ambient air, and the electrical chemical process spits out effectively electricity. We have heat in this case that we've designed it for, and some pure water as a byproduct. Pretty simple, not very complicated, and can't wait to educate the market on that. Technology, again, what makes our technology slightly different than other ones is that we use, yes, it's bulkier, but so you wouldn't put it in a car. It's meant for stationary, but we have the advantages of just fewer lower cost. We have lower cost material that we get to use. Nickel is one that we use. Is probably the most expensive, but compared to what goes into other fuel cells, we're quite confident that we always sustain and maintain that type of value advantage from a price perspective. And again, I get into that a little bit more here. So we are about half the cost of a PEM fuel cell, and I would argue we could be better, but at this point we'll say we're half the cost publicly. I'm very excited about that, and that's what allows us to, I think, go after our market share in the markets we are going after, the more smaller, from a 4 kilowatt to maybe 100 kilowatt package. So that would be a building, small building, construction site, a home, small business. So we like the customers we're going after. This one's always interesting. Some people wonder why we do this. There are clear advantages for a fuel cell, say, versus a battery. A battery, in this case, we pick on Tesla. No, it doesn't do domestic heating. We have that advantage. The constant power, it needs certain inputs. So a battery is great for very short-term power requirements. You have some excess power, you have a very short-term need, like you have a backup power for your computer equipment. I get that. It's for a very short-term requirement. We're talking about a fuel cell that can do backup and peaking and be there for days or longer if need be, and it's a very different product. We're not looking to compete with batteries per se, but we have a very good sweet spot in a situation, in a design, in an integrated picture that allows our units to be the affordable, that's the key here, affordable, renewable, and reliable product for that power. And so we're quite confident in competing with people like Tesla from that perspective. The opportunity, the market's pretty big and it's going to get bigger. I want to bring something up for people, and I have a bit of time left here. I want to bring something up. Years ago, I was involved in the
early days of the solar sector. And from a Canadian perspective, early days, we were talking about over $5.40 to installed a watt, right, for solar power. And no one really saw this coming. And then China dumped solar cells globally. And here we are, similar type project is down to like maybe 75 cents a watt install. I mean, it's ridiculous what they've done to reducing the price. And the market followed. With hydrogen, we're not makers of hydrogen, but we need to read the tea leaves and understand where the market's going. And so Europe has been building hydrogen backbones. Amazing. Cannot wait to serve those customers on the end of those backbones. I think that's amazing. United States, with the passage of their Inflation Reduction Act, the IRA, and the subsidy of green hydrogen by $3 a kilogram, it is steroids. It's a shot in the arm to bring down the cost and to drive the adoption of hydrogen, drive the gigaton of facilities building out electrolyzers. It will be a shot in the arm, and then the subsequent responses by Europe and Canada and every other market to keep the companies who've invested in their countries to continue to incent and keep hydrogen flowing. We're really excited, and when people like the U.S. Department of Energy are saying that green hydrogen could be as little as $1 a kilogram come 2031. My personal opinion is I think that's actually pretty conservative. I think there's a great market opportunity for green hydrogen in the coming years, and our product attached with that green hydrogen has a very low cost of energy attached to it, and we see that as a very competitive market for us. So I want to give you a sense of where the market's going and the why. It's the IRA has done a lot to drive it than we could have ever hoped. It's amazing. Revenue model, I'd say they're more placeholders. We definitely see an opportunity to sell our units. We see an opportunity to continue to grow in the near term. You're going to see the blue line growing much more, which is revenue in our developer, owner, operator hat of having these multi-res or hospital CHP units being deployed, hopefully about $50 million plus over the coming years. So we see the revenue in the coming years of the units themselves, the equipment, being an OEM of the equipment, being a developer, owner, operator of the assets, of the long-term contracts, so very integrated play, and then the additional parts and the servicing. We want to build this alternate asset class that has this advantage of providing its products. We're pretty excited of what that looks like in the coming years. And again, I got into a glimpse of it, but this market's just going to get bigger every time people update these numbers. They get bigger. It's because every oil company is now jumping onto electrolyzers. Utilities in North America in the last 6 months have all realized, as much as they were trying to electrify their grid, they realized that hydrogen will be a critical piece for probably between 5 and 15% of their peaking requirement within the grid, just to solve their peaking issues. You can't build all this electric capacity for those few times a day or a month or a year where you're at those peaks, and we think hydrogen has a very unique role in that. I see some questions coming in, can't wait to get to them. Roadmap, keep this quick. We acquired a number of these CHP assets with the intention of generating revenue, deploying capital, generating revenue, using those earnings in our business to offset our burn effectively and make our business profitable. But it's fundamentally get us to the hockey stick of our fuel cell business, which we're on pace here. And at the end of, or in 2023, we're looking at getting our first launch prototype in January. We'll get that certified next year and continue to move forward. In 24, we'll have additional products certified, the 4 kilowatt, leading then to the 10 kilowatt. But we're already announcing pilots for these, so that's exciting. We already have interested parties who want to do something with us and help scale and grow the access to hydrogen. And as we look out, I don't think we have to wait till 2027, but absolutely as we develop our own developer, owner, operator projects, there's an opportunity to use our fuel cells within that mix to meet peaking and backup requirements, even within the systems that we're installing today. So we have a really interesting pipeline path. And I will add, This is just the path we're on without the acquisitions and the discussions we're working on or discussing with to really scale our business. So we're not doing this without considering acquisitions as a way to get to EBITDA positive and grow our business. Because you can tell we have a very small market cap, and that is Canadian, very small market cap. But we believe for investors, it's really about investors want to jump in before it's reached its peak. And I just believe from a technology perspective, here we are launching our product, our prototype on January. We've de-risked our technology to the point now where it's really execution risk of our commercialization. It's a very different fundamental phase we're in than we have been for the past year. So we think it's a great time for people to look at us. From a people perspective, I don't have to look at this. We're excited at the team, realizing our first revenue focus is to get our CHP assets up and running and get them deployed. I brought in Carmen Marcello as a former CEO of Hydro One Inc. Hydro One, they have assets, I think, of over 26 billion in Canada, in Ontario, Canada. He ran a very large electric utility and the deployment of those assets and the servicing of them. And I just looked at our bench and made sure that we start matching beyond the fuel cell side. We start matching what our intentions are to grow our alternate asset class. And I think there's more of this to come, but I'm very pleased that Carmen's there. Joe Verstappen was our COO until recently. We've now moved him full-time into being the managing director of our fuel cell business and many components for manufacturing. And that whole commercialization strategy will be coming out shortly. And then the rest of our team, we don't have our board members in this, but we're very pleased with the team we have. Capital structure, we've done something of late to, we had a number of warrants at the 75-cent range. We did a repricing of our warrants, all of them actually, to get them to the 20-cent range. And then recently announced a $4 million convertible debt note financing that had a number of 15-cent warrants attached to them. We've reduced our options as well from a higher level to now no higher than 15 cents. And why do we do that? We now have the potential, if we can achieve 15 to 20 cents or so in our share price in the coming months, we have a potential of bringing in over $11 million of exercise options and warrants in cash. That's already on the cap table. So, we certainly want to take care of and ensure that the investors we have to date are happy with what we're doing, and we're very confident of the story and the narrative we have will help us secure some of that cash coming in as well. This is just really where we're at. I think I've explained it a few times. I want to get to some questions, and so if you don't mind, the first question, let me get to it here. First question, I don't think I'm going to read out the names. Can you access any incentives included under the climate change initiatives included with the U.S. Inflation Reduction Act? Great question. At the moment, we don't have any, we're not looking to have any production, particularly in the US. Again, we're a downstream beneficiary of cheaper hydrogen being developed. So the conversations we're having are really about how we leverage the fact that as green hydrogen is being developed, as hubs in Houston and all over are being developed, that we'll be deploying our pilots or our units on the back end of that to those customers who will, again, be the beneficiaries of lower cost energy. So we haven't looked specifically, I think, until our prototypes are up and running. We haven't looked specifically at certain incentives other than the conversations with customers who know or integrators who know that there's a market for that. We see other people moving on it, like Generac and other generators working with fuel cell companies, and it's just a timing issue. We'll be there shortly to look at our piece of that pie, but we're very excited that the effort the IRA is having is really reducing the price of hydrogen or the cost of it, enabling us further. So I appreciate the question. Next question, do you have any IP protection for your alkaline cell? There are a number of patents that we'll be announcing shortly as we do our launch, and after that, a lot of great technologies and the balance of plant and the components around it. Not everything that we have in our alkaline fuel cell units are ours. We do use other components. There's no need to reinvent the wheel on things that are cost effective. So, we do have a KOH, an alkaline solution that's not ours, but in the design of it, there are a number of components we'll have patents in as well. So, but great question. Again, it's taking all the different pieces, the pieces that we have patents on and the ones that we don't, and combining them for far greater value. can't wait to explain what we expect to be our price or cost of our unit and what we retail them at, but that's something that will come out soon enough. Very exciting. But thanks for that question. Can you discuss your sales resources and channels as you roll out in 2023? Good question. On the CHP side, so we talk about the developer, owner, operator side of that business. We do have our pipeline, and there's conversations that we're nurturing and agreements and moving ahead and matching the capital. Those are other discussions to match along with those projects. So that sales pipeline, we're confident of what we have on the street. We're confident in our value proposition and our differentiators and our offering. And they only get better in the market we're in here in Ontario, Canada, primarily because really expensive alternatives. I see time's running out. So that is getting better. Our fuel cell side, as we launch it, we'll start looking at the whole commercialization rollout. We have a great director out in Belgium who's running, Stefan Lau is running our business development, 20-year hydrogen person, and very excited at those stages that get rolled out in 23. So that is something that will happen then. So we have time for another question. Do you have the capital in place to support our 2023 initiatives? When do we expect to generate meaningful revenue? So great question. We announced a $4 million convertible debt note financing. We'll use that as we think we need to use that. We're definitely in discussions to secure additional the Canadian tax incentive credits that we can use to help meet our equity requirements of a lot of our projects. But of our CHP business, a rule of thumb is about 80% of those projects would be senior debt on the back of the pro forma of those deals. So that obviously reduces to maybe a $12 million equity requirement. And because of the way that we design our projects, we look at a lot of the tax flow or the flow through tax credits as a big part of meeting our ability to meet our equity requirements. So that is a work in progress, and there's other things that will come out sooner than later on how we're achieving that. But that would match that in the short term. And again, our $2.2 million project we're working on next, as an example, of that, again, only 20% of that would be about our equity requirement. The rest is senior debt. And that would spit out over 16 million over 25 years as well. So as we keep building up our deployed assets, then we have a greater ability to even leverage against them beyond the debt side and keep building up our business. But definitely, we'll be looking at other unique solutions to meet our equity or capital requirements and achieving a good investor awareness program and getting the price at a range where we're able to bring in the exercise options and warrants, can get a good chunk of the way there of getting in close to $11 million as well. So we're looking at things like that. I think that's it for questions. I ran past the time. I want to thank everyone for joining me today. I am always open. Anyone who knows me, you can reach out by email or set up meetings the next few days. Would love to answer more questions and really appreciate your time to listen to me today. Thank you very much.